Welcome to this explainer. Let's cut right to the chase today. We are completely bypassing all that confusing financial jargon that usually makes the stock market seem like an exclusive club. Instead, we're giving you a highly actionable, step-by-step execution plan to start investing right now. If you've been sitting on the sidelines, just feeling totally overwhelmed about where to put your money, you are exactly in the right place. We're keeping it strictly focused on the practical actions you can take today. Okay, think about this for a second. If I offered you two choices right now, $1,000 in cold hard cash or the knowledge to turn just $100 into $100,000, which would you pick? It's kind of crazy, but most people actually jump at the $1,000. They take that quick cash, and honestly, that's exactly why most people stay broke. Building real wealth isn't about how much money you start with. It's literally all about knowing exactly what to do with the cash you already have. So here is our exact blueprint to get you there. First, we're going to secure your financial foundation. Second, we'll choose your brokerage platform. Third, we'll talk about buying broad market ETFs. Fourth, we'll put your monthly investments on autopilot. And finally, we'll cover the massive mistakes you absolutely need to avoid.
All right, let's dive into step 1, financial foundation, and how to prepare the ground. Now, before we even think about opening a stock chart, there are two non-negotiable prerequisites. Step 1. Pay off any high-interest debt. If you've got a credit card bleeding you at a 20% interest rate, you have to squash that. Why? Because absolutely no reliable investment in the world is going to consistently beat a 20% loss. You've got to plug that leak first. Step 2. Build a 3 to 6 month cash emergency fund. Look, life happens, right? A car breaks down, a job falls through. If you have this cash safety net ready, you'll never be forced into a corner where you have to sell your investments early at a loss.
Foundation locked in? Awesome. Let's move to step 2, brokerage platforms, and how to actually open your account.
To buy an investment, you're going to need a brokerage account. And please, do not let that fancy Wall Street terminology intimidate you. A brokerage is literally just a normal bank account, but instead of holding your daily spending cash, it holds your assets. That's the whole secret. It's just your digital gateway to swap your cash for investments.
So you might be wondering, well, which one do I use? Here's the deal. Pick a highly recommended platform known for low fees and an easy-to-use app. If you're up in Canada, for instance, Wealthsimple, Questrade, and Interactive Brokers are all exceptionally solid choices. You just want low fees and decent support. Honestly, the worst thing you can do right here is get stuck in analysis paralysis. Just pick one, open the account today, and keep moving forward. Don't overthink it.
All right, your account is open and funded. Step 3, buy broad market ETFs, which basically means acquiring the right assets.
There is a massive distinction in risk here that you need to grasp. Most beginners think investing means picking the next winning stock. But when you buy a single stock, you own a tiny piece of just one company. That is incredibly risky if that specific company takes a nosedive. We want to bypass individual stocks entirely and focus exclusively on ETFs, or exchange-traded funds. Think of an ETF like a giant basket of many different companies bundled together. This radically lowers your risk, because now you're betting on the overall market instead of gambling your money on one single business.
And if you're looking for the ultimate beginner asset, you really can't beat an S&P 500 index fund. This is an ETF that tracks the top 500 companies in the US market, all at exactly the same time. By grabbing this, you aren't trying to outsmart the market, you're just becoming the market. Historically, the market trends up over time, and this one simple move lets you ride that massive upward wave without needing a degree in finance. Okay, let's roll right into step 4. Automate monthly and put this whole thing on autopilot. This is where the magic really happens. Using a strategy called dollar cost averaging, instead of sweating it out, trying to guess when the market has hit rock bottom to drop in a huge lump sum, you just invest small, fixed amounts of money on a regular schedule. It's a brilliantly simple strategy. It means you automatically buy more shares when prices happen to be low and fewer shares when prices are high. Most importantly, it completely removes the emotional urge to try and time the market. Your practical next step here is to set up an automatic recurring transfer straight from your checking account to your brokerage. Make it a very tangible, completely doable amount. Something like $50 a week or $200 a month. Treat this auto transfer exactly like your rent or your internet bill. It's totally non-negotiable, and it just happens quietly in the background while you go about living your life. And wow, this genuinely illustrates the crazy reward of consistency and compound interest. Just look at these numbers. If you take that same $100 a month and invest it at an average 8% return, in 10 years you're looking at roughly 18 grand. But look what happens when those returns actually start earning their own returns. In 20 years, it jumps to 60 grand. In 30 years, a staggering $150,000. It is the exact same monthly effort, but it snowballs into massive wealth, just because you started early and, more importantly, you stayed consistent.
Finally, we hit step 5, mistakes to avoid and how to protect that wealth you're building. Consider this your mandatory behavioral guardrails. First up, investing is not gambling. Stay far, far away from any scheme that promises to double your money overnight. Second, do not panic sell. The market is going to dip occasionally. That is completely 100% normal. Selling out of fear just permanently locks in your losses. Third, ignore the internet hype. Just because a stock is trending on social media does not make it a smart play. And finally, the absolute biggest mistake you can possibly make is getting intimidated, staying on the sidelines, and choosing not to invest at all. So if you take nothing else away from this explainer, remember this beautifully simple 5-step execution plan. Open that brokerage account, deposit a small amount of cash, buy a broad market ETF like the S&P 500, set up that automatic monthly transfer, and hold it for the long term. That's the whole shebang. No complicated strategies, literally zero daily trading. It just takes a little bit of discipline.
You know, most people will spend years just thinking about investing, reading endless articles, worrying about it, but they never actually pull the trigger. Stop waiting for the stars to align. Stop waiting until you have the quote-unquote perfect amount of money saved up. Like the old saying goes, the best time to invest was yesterday, but the second best time? That's today. Start small, keep it simple, but whatever you do, take action right now.
So, I want to leave you with one final totally provocative question. How much are you starting with today? Seriously, I want you to decide right now exactly what your very first deposit is going to be. Drop that specific number in your mind. Got it? Good. Hold on to it, close this out, and go take that vital first step to open your account. Your future self is going to thank you for sure.